What's up guys, Mike here. Over the last few weeks, I've seen that a trend is going on here, and I thought it was important that I discuss it and go into it much further. Even though there's a record high of unemployment going on, first time in history we see negative oil prices and an economy that is pretty much still shut down, the market still likes to go up in value when truly the value of many of these stocks are not even near worth their current price. I found that there's two types of investors out there, and I decided we can discuss it a lot further in this video. The first type of investor is one that can't believe the market is still climbing up in price despite the horrible earnings being reported, bankruptcies being filed, mortgage forbearance reaching 7%, and many other bad news. These investors are just hoarding tons of cash because they think once the market realizes its true fate, the market will come crashing down, and at that point, it's going to be the perfect time for him to cash in and print those tendies. Our second type of investor is one who sees the whole market at 50% discount, and he has no downsides to it, and he thinks eventually everything will go up, and he is going to also print those tendies. Honestly, there's no real best strategy because we were just from all-time highs and now have dropped about 50%, and eventually everything will go up. In doing so, the market continues to climb upwards another 2%, and nobody wants to miss out on that opportunity. So our number two investor just pumps in more cash because he doesn't want to miss another 2% gain on his investments. So pretty much both of these investors are facing a huge problem at this moment. Our number one investor assumes that the market is logical and everything will come and correct itself. But as we can see and notice from here, nothing makes absolutely any sense. So the market is not logical. We have analysts that say the market will collapse again, and another analyst who says that we are at the beginning of a new bull market. In this video, I'll go over some of the biggest mistakes investors can make in a market like this, and I'll also go over stock market collapses and then go over some of the best strategies to use to come out ahead in the long run. We'll start all of this as soon as you guys destroy that like button. Just destroy it, give it a little tap to turn that like button blue, and then we will begin. So with that said, let's begin. So far, there has been some heavy increase in the finance and business section where people have entered the market in order to find new ways of earning some income. Right now, people are out of work, stuck at home, and trying to find ways to increase their income, so they're turning into the stock market as a way to do so. This can also lead to many problems down the line when things go in the wrong direction for them. So let's talk about our first investor who's hoarding cash and waiting for the stock market to hit rock bottom and to finally make any sense of all this. Because honestly, in reality, it makes absolutely no sense whatsoever why the stock market is trading at all-time highs that was trading at in October of 2019. One analyst says that the economic impact will take until 2022 to recover, and it will cost the US trillions of dollars more to come. From all this, one thing we should all take note, and that is the stock market is not the economy. Even though stock market prices can be varied due to the economy and how the companies are doing and how they are also performing in earnings, it really does not make a match between the market and the economy. They are two separate plays and two separate individuals, and we have to come and realize that is the basic rule of the economy. The market is not the economy, so it's not going to make sense, and it's not going to match in price whatsoever either. What happens to the stocks and what happens to the economy can be two different total things. Even though the economy is not doing well, there's a ton of unemployment going on, we still see some of the strongest recoveries since 1974 in the stock market, all due to people speculating and the Feds printing money and pumping it right into the stocks as much as possible to keep them going. The thing is, as much as you think a stock should go down, the market will usually outlast how much money you have in general. This all means whether the market drops or goes up in value, it does not make any difference on what's going on in the businesses. Just because the market goes up in 10%, it does not mean that the business went up in 10%. Neither does it mean when the stock market goes down 10%, doesn't mean businesses went down 10%. So pretty much the market will outlast how much money you have in general. The best advice I can give to the first investor is that no matter how much businesses are down, it does not mean that the stock market will follow its path either. It's more due to how the economy is and how businesses are doing and how market is irrational, and it will never make any sense whatsoever. The stock market is not going to reflect what's happening today, but it's what investors think will happen over the next few months or years. This just shows overall, things will get better with time, and the best thing one can do is to invest consistently, buy and hold for long term, regardless of what any news outlet says. We just have to realize no one can predict the future, and it's best just to stick with your plan and continue investing as usual, and you'll come out ahead and more profitable over time. Now let's go over our second type of investor who thinks pretty much everything is on discount and sale, and pretty much eventually everything will go right back up to its original spot that it was before this crash, and it'll even continue further going up. The thing is, the faster the market starts going up, the faster they have to pump in more money in order for them to feel like they're not going to miss out on any opportunity that's going on right now. This is where a lot of issues can come up for our second investor. A lot of investors are going to be let down because they feel like what goes down must go right back up, and it might not even happen. Just because there was a massive drop, it does not mean that there will not be another massive drop as well. Also, there will be times where the market will just trade sideways and your money will not gain in value, and that's where they're going to be disappointed as well. It's really important to go in with the correct expectation that nobody knows the future. Again, the best rule is to buy and hold for long term and invest consistently and be as diversified as possible, because that is the way. It's the way. And that is the best way that you're going to become profitable and come out ahead in the long run, because it's the way. So the best advice I can give to anyone is to buy and hold for long term. Invest your money consistently as if nothing has changed, because that is the way you're going to come out ahead and much more profitable than to jump all in at once or think that the market will crash eventually and make sense whatsoever. Just remember, no one can predict the future. You can try to rationalize all this as much as you want, thinking that everything is priced in, the feds are pumping and printing money into the market, everything will go up. But eventually things will catch up and it will not make sense again, because the market is not the economy. The market is not rational, and nothing will make sense, and no one can predict the future. I believe a lot of new investors will get burned because they do not know what to do when their money goes down in value, and they're going to make irrational decisions because they're also not rational as well. The funny thing is that there has been a study that buying a company with a cool ticker symbol may be the winning stock and end up making people a lot of money without knowing what they're actually doing. If you don't know this, but to find a company, you put a company's ticker symbol, and there's a few letters that you have to type in to find that specific company. Like if you want to buy Apple, the ticker is AAPL. And if you want to buy Microsoft, the ticker symbol is MSFT. And actually, to me, that actually looks like Misfit, which I thought is really cool. MSFT looks like Misfit. Yeah, it's pretty funny when you look at it that way. However, there are some confusing tickers out there. For example, if you want to invest in Zoom, the conference site a lot of people in schools are using, the ticker symbol is not Zoom, Z-O-O-M. It's actually ZM. And according to researchers, ticker symbols have a psychological way of having investors buy a specific company, and needless to say, they end up even outperforming the overall market 19 out of 22 of those times, such as using tickers like pizza, Wi-Fi, money, and X-ray. A few advice I can give to investors is, and that is not to time the market and to not buy because of impulse, and to always have a plan for what you are buying before you buy a specific stock. Finally, one last advice I like to give, and that is it's better to invest at least some money into the market than not investing anything at all. Anyways, if you're planning on investing in the month of May, there's a saying that says, sell in May and go away. Now, this does not mean that you should sell everything in the month of May and get the heck out and run for your life. It's more like in the month of May, growth usually goes down, and this gives you an opportunity to buy stocks at a discounted price. It doesn't mean sell and get out. It actually means it is the best time for you to take advantages of many opportunities and discounts that are headed your way. But all in all, it's always best to invest consistently, buy and hold for the long term, because that is the best way for you to come out ahead in all this. Because hoarding all your cash and waiting for the stock market to hit rock bottom may never happen. Get it? In the month of May never happen. See what I just did there? It may never happen, so don't hoard all your cash all the time. Just know that the market is irrational and it doesn't make any sense, and it may never make any sense. Nobody knows the future. A stock market crash may or may not ever happen. Like I said, the best thing you can do is to buy and hold for long term, and buy consistently without any regards to what's going on to the economy, because eventually everything will go back up. New stock market highs will come to life, and we will get past through this disease as well. To be honest, I think it's going to take a few years before the market actually recovers to where it was before, and people may not spend all their money again once this economy opens up again. People may hoard cash because they feel that they are unsafe and insecure, and they're going to hold on to their money a lot longer. So it may take much longer for the economy to recover again. I also don't think a lot of businesses will be rehiring anytime soon, and a lot of them will be restructuring their whole entire business model as well, so stay tuned for that as well. With that said, thanks again for watching my videos. As always, make sure to destroy that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, feel free to add me on Instagram. I pretty much post there daily, so if you want to be part of that, make sure to add me there as well. Also, if you want 2 free stocks from the stock market, WeBull is giving out 2 free stocks. One for just signing up to use their platform, and a second one for making any amount in deposit. It could be $5 or $10. They'll give you a second stock worth up to $1,400. So check out the link in the description below. Also, Robinhood gives out a free stock. Make sure to check the link in the description below for that one as well. Thanks again for watching my video, and until next time, make money with Mike.